So what is the profit account and why is it so important when we are doing profit first in your business? So what happens in most businesses is we leave profit to be at the end. If there's something left over, then we can take a profit. So the standard formula is sales minus expenses equals profit. So profit's an afterthought, and we know what happens when things are an afterthought. Everything else gets done first, and then we forget about that. What profit first does is flips that formula on its head, and it's sales minus profit equals expenses. So we put profit first, hence the name. And the reason why we do that is because what we focus on and put attention to happens. And then what we're left over with is being encouraged to be resourceful with our expenses, because that is, we're working with a set amount of money to pay those bills, and we're always putting our profit first. Now, a couple of questions that I've had around the profit account from people who have sent in, questions in. One of them was they've been doing profit first in their business, everything is going really well, and they just wanted a refresher on what they do with that money in the profit account. So every week, for example, when you do your allocations, you will put a percentage into your profit account. Now, if you're just getting started, 1% is a great place to start. And if you have been doing profit first for a little while, you may have 2, 3, 4, 5, sometimes up to 10% into that bank account. At the end of every quarter, the goal of that profit account is to do a number of things. Firstly, we want to make sure that if you have any debt in your business, that we are putting a portion of that debt, of that profit account, to pay off that debt faster. Now, if you have debt, you will still be making your regular monthly payments towards that debt. This is just an extra payment to get rid of your debt quicker. And it doesn't have to be, in fact, it shouldn't be 100% of your profit account. You will decide what is the best percentage for yourselves. Now, some clients want to get rid of debt quick as possible, so they will do something like 95% to debt, and they'll keep 5% for themselves as a profit distribution. Other clients are quite comfortable with debt, and they'll do 50-50. Whatever the percentage is, work out what meets and helps you achieve your goals and stick with that. Now, whether you're taking 5% out of that profit account for yourself or you're taking 50% out of that profit account, it doesn't matter what the percentage is, as long as you take it out of that profit account and transfer it into your personal account. Now, the purpose of that percentage of profit coming to you as a distribution every quarter, that's your reward for being the business owner and taking all the risks and the stress that's involved in being the business owner. This is not as a replacement of your wages. You should always be taking your wages from the owner's pay account, and that is to pay you for the job that you do within the business. The profit distribution is your reward for being the business owner. So as I mentioned, we take that 5%, 50%, whatever it may be, we put it into our personal account. Now, once it's in your personal account, we need to give it a purpose again. We don't just want that being chewed up into the regular bills, because that isn't super fun at all. So what we suggest to do is, it might be go out for lunch, take the family out for lunch, go on a holiday, whatever it may be, but it's something that you let the family know that this is a profit distribution from my business. This is a distribution for all the hard work that I've put in over this quarter, and get them involved. Start setting what you want to do for the next profit distribution. And by getting everyone involved in that conversation around what you would like to do, really helps encourage you and keep you on track when things may not be going as smooth as they should be in the business. So for example, for me in my business, savings for family holidays is the prime purpose of my profit account, and we are saving up to go overseas at the end of this year, and that's where my profit distributions go towards. It doesn't have to be a holiday, it could be a weekend away, it could be saving for a boat, a bike, a car, whatever it may be. As long as you have a purpose around it, we really want to make sure that we have a specific purpose for that, because we know when we have a purpose, then it helps us stay on track. Now, the other thing that we wanted to briefly touch on here is around the tax implications of taking a profit distribution. Now, with everything that I do, and if you've ever spoken to me or seen any of the information I've put out, when we're talking about the tax situation of your business, we always need to be talking to your tax accountant, because they are the ones who are firstly qualified and have an idea about your tax situation. And I would like to think that you would have had at least one meeting a year discussing what your goals and plans are and working out what the best tax strategy is for you. Now, for some people that's a tax minimization strategy. For others it is not, and there's various different strategies that can be put in place. So with that, always go to your tax accountant and discuss your tax situation. But what I will say is that yes, when you take a distribution from your profit account, it will need to be included as income. But again, your accountant is the best person to be able to work out how to structure that, so that if you have a tax minimization strategy, for example, that you are being able to minimize your tax. Now, what I don't want to see, and sometimes I hear this, is, oh, I don't want to take a profit distribution because I don't want to pay tax. That usually indicates to me that you're not having that tax strategy and tax planning chat with your accountant, and I highly recommend that you do, because it will give you a much greater view of your income and a much greater understanding of how things can be structured, because we don't want to just be leaving money in the business or spending money unnecessarily in the business because we don't want to pay tax. That is not a good long-term solution. So please, if you have any questions around what the tax is going to be on the money that you take from the business, you must give your accountant a ring, book in a tax planning strategy meeting, and get that in place. It's something that I recommend all my clients do in about May every year, and sometimes even 6 months after that, so that we can work on setting your plan for your individual situation, and we can start setting up your business to be able to provide you with what you actually want. And we stop the business telling us what it can give us, and we start building that business to be able to give us what we want. So for example, if you want to buy an investment property or you want to upgrade your home and you need to borrow, then having on the books that you earn $40,000 a year is not going to meet the criteria for you to be able to borrow money. So again, by having that conversation with your tax accountant and letting them know that yes, in the next year or two we may want to borrow, then they will be able to help you with working out exactly what you need to take from the business as a wage or as an income, and to be able to put those steps in place. Now, if you're thinking about upgrading your home or investment property or borrowing down the track, and you need your income to be at a certain level and it's only down here now, well then we need to get working on Profit First to work out how we're going to build your business so it can afford that income for you, so you can get your goal. So that's why it's really important to think about 1, 2, 3 years down the track. Some people don't like to think too far ahead, others can plan out the next 10 years. I do suggest at least 2 years ahead, if you can just start thinking, having some kind of ideas around what that may be, particularly if it involves buying or selling of properties or borrowing of any description, because we want to build your business to be able to support those. So that was a quick wrap up of the profit account, and as I said, a quick touch on the tax implications. Always speak to your tax accountant. They are the only people who can give you tax advice, but make sure you then bring that tax advice back to your certified Profit First professional that you're working with, so we can then structure and customize your Profit First for your business to be able to make sure that we can reach those goals.